Hi, I'm attorney Chad Silver, founder of Silver Tax Group. At Silver Tax Group, we plan your foreign account compliance, build your disclosure strategy, and defend it if necessary before the IRS or FinCEN. All work is done in house by our experienced legal team. Today, we're diving into one of the most confusing topics in international tax. That's the FBAR versus FATCA Form 8938. And well, you may say, well, what's the difference? And let's start with the basics. So, FBAR stands for the Foreign Bank Account Report, officially known as FinCEN Form 114. FATCA Form 8938 is part of the Foreign Account Tax Compliance Act and is filed with your personal Form 1040 tax return. So, the most important distinction is the FBAR is filed separately with the Treasury Department's FinCEN system, while Form 8938 is filed along with your tax return to the IRS. They go to different places, but they often report similar accounts. So, another key difference: FBAR is all about account balances, while Form 8938 is about foreign financial assets, and you must also report any income earned from those assets. So, if you have a foreign brokerage account and you earn $2,000 in dividends, that income must be reported on Form 8938, not on the FBAR. So, let's talk about thresholds. This is where many taxpayers get caught up like in the weeds. For FBAR, you must file if the aggregate balance of all your foreign accounts exceeds $10,000 at any point during the calendar year. That's fairly straightforward. For Form 8938, the threshold is higher and depends on your filing status and whether you lived abroad or not. So here's some examples. If you're single and living in the US, you must file Form 8938 if your foreign assets exceed $50,000 on the last day of the year, or $75,000 at any point during the year. So for married taxpayers abroad, the threshold can go as high as $400,000. The bottom line, Form 8938 has higher thresholds, but also requires income reporting. So, do you need to file both of these? Well, yeah, many taxpayers must file both. And if you meet the threshold for each, then you must file both the FBAR and Form 8938, even if the same account appears on both forms. So let's dive into an example. Another client, John, the US tax expat living in Germany, has 60,000 euros in a local German savings account. That account balance is over 10,000 US dollars, so he must file an FBAR. But John also receives $2,000 in interest income from that account, and his total foreign assets exceed the Form 8938 threshold, so he must also file Form 8938 and report the income. And let me run through some of the most common mistakes we see here. Only filing the FBAR and forgetting about the 8938. That's a recipe for disaster. So failing to report foreign income on 8938, no good. Thinking FBAR is part of your tax return while it's not. It's filed separately on the FinCEN website. We've helped hundreds of clients navigate this maze, and we get calls every week about it. Like Emma, a dual US citizen who had retirement accounts in UK. She didn't realize that her NS&I account was reportable under both FBAR and Form 8938. We helped her to file 6 years of past reports through the streamlined procedures with no penalties. Or Mark, an American living in Australia, his superannuation account needed to be reported, and we handled all the filings accurately and defensively. If you're unsure about whether you need to file FBAR, FATCA, Form 8938, or both, call us today at 855-900-1040. We'll create your compliance strategy, build your disclosure, and always defend it if needed. No guessing, no fear, just strong legal tax firepower on your side. I'm tax attorney Chad Silver, and this is what we do every day. Please don't hesitate to subscribe to my channel and click like if you like it. Thanks.